Hey guys, this is Bruce Marshall from Simpler Trading with the nightly market update for Wednesday, August the 13th. Happy Wednesday, happy hump day. I hope you guys are doing fantastic this week. Hope you're long because this has been a crazy rip higher this week. This is the ES. We're going to look at the ES. Here's the NASDAQ and here's the RUT for today. But let's look and see what we've got going on here, and then we'll get into a little bit deeper where we think the market might go. So ES today hit another all-time high, 65.02. This is ES. Crazy, just keeps going. How high can it go? That kind of thing. That's the main thing that everyone is on everyone's mind. And I'm going to kind of talk about both sides of the coin here. But we had a new all-time high in the ES. We had a new all-time high in the SPX. We had a new all-time high in the NASDAQ. We're pretty close on the Dow or the diamonds. But, again, all-time high. But let's look at this. So 5-day chart here. Now what kind of sparked it on Tuesday, that was CPI right there. Boom, and we're off to the races. And if you guys were in the webinar I did last week or in the class I did last night, we talked about this. That was more than I was expecting. You get a little more explosive move typically off CPI than PPI. Now we have PPI in the morning, so I don't know if we'll get that much of a move off of it. But what this is signaling is more ammo, I suppose, for the Fed to cut rates, and that's what's getting the market all jittery and excited here. So let's look at our Fed Watch tool. If I can get it over here, get it on here where we can see it. Okay, so Fed Watch tool here. Now this is there is no Fed meeting in August. The next one is September 17th. Current rate's 425. The expected rate cut down here is 93% chance of a rate cut from 400 to 425. We're at 425, 450 now, so this is a cut down, right? There's actually even a 6% chance of 50 basis point cut there. That's pretty interesting. This before, maybe it was a week ago or so, it was about 56% or something like that, and it's gone up just steadily to now 93%. So, the market is saying that we're going to get a rate cut. Now, one thing I'm wondering is that, is this already being factored into the market with this rally? When we get it, is this actually going to happen? That kind of thing. And that's, again, the biggest unknown. But I want to show you something pretty interesting here. If you go out here to a 20-day chart and you look at that at first glance, what does that look like? It looks like a yearly chart, doesn't it? This is the big drop and the big rip higher. So that's a 20-day chart. Look at this. It's a 1-year chart, eerily similar. It's just a mini version right there. But anyway, I thought that was kind of interesting. Here's the start of 2025 right there, and then the chop, tariffs, free fall all the way down, rip 30. We're 30+% now. This thing is kind of set to go, honestly. And I can't believe I'm saying that, but the market still looks pretty good at this point. There is a lot of reasons that we could keep going. Valuations aren't really completely stretched. We're at a pretty good valuation on the S&P, I suppose, but if you look at the tech company, the earnings and what AI is contributing and all that kind of stuff, you could say that it's justified, I suppose. Now we have seasonally weak August and September, typically, or even more heavily September than August, typically about 2% down. Is that going to happen? I don't know. And we've been talking about this kind of constantly because, we are overdue for a pretty decent pullback here, and that would be healthy, not a bad thing. That'd be healthy for the market, and then we would buy it, hand over fist down here for the next run higher. And we were talking about that, and I said, this thing when we had that flush down right back to skyline there, and then we're off to the races again, right? I said this thing can go here, it can go here. That would be if we went ahead and got it out of the way. This was 1st of August right there. That would be the healthiest thing for the market, to kind of reset, take a break, and and then take off again. And we instead, just came down to Skyline, and now we just taken out that all-time high right there. So very, very interesting. Check this out. The one thing that I really keep an eye on is this is the big money index, basically institutional money or money flowing into the market. And we're at 66% right now. And the way to read this yellow line is inflows into the market. This is for SPY. We can run it I run it for IWM, diamonds, Qs, whatever. But this is money coming into the market. This is the market itself, right? So money comes in, market moves up. Interestingly, when this red line is when we are overbought. The green line is when we're oversold. So up here we hit overbought. This was last October. Started coming back down. The market continues to go up for a little while, right? And then the outflows continue, and we kind of flatten out. There's up, kind of flatten out there, and then we all roll over kind of at once with tariffs and all that kind of stuff. But what's happening? Check this out. If you're familiar with moving average crossover, the market's going up, the money flow is going down. There is a crossover right there, meaning money is flowing out of the market. And the way to think about that, if that doesn't make sense, you've got the faucet in your sink, is you turn it all the way wide open, and then you turn it back a quarter turn. That's kind of what's happening now. So that's not the end of the market, and this can always pick back up, right? This thing could pick back up and keep going, and then this keeps going. But that's kind of the first crack in the ice to me that things might not be as rosy as they seem. Again, I'm bullish. So and I've been bullish this whole time, actually. The money started flowing. If you watch the money flows, it started coming in heavily back here. So we stayed bullish, through this whole thing, right? It was very nice. It really, really came out down here, and it really started flowing back in very, very quickly. This is very, 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 very similar to 2020 when COVID happened. Kind of same thing happened. I mentioned that in that webinar that I did. How similar these two patterns were. So, I think it could also mean, and I'll show you that, this could also mean right here. This is start of 2020, start of 2025, up, basically flash crash down with COVID, off to the races. Watch this, pull back, that's a 20, pull back to the 20, and then we're off, and we went for a long, long time, right? Same thing, up, free fall down on tariffs, come back up, and now this was taken a week or two ago. We pulled back to the 20, and now we've taken out that all-time high. Very, 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 very similar patterns, right? So keep that in mind. This thing could keep going, in other words. So I wish I knew. But I'm going to keep playing it to the upside, and when it does pull back, I'll play it to the downside, and then I'll buy once we get to an oversold level. Let me put the 20-day on here. I just want to see. What I've got on here now are voodoo lines, and yeah, so there's the 20, there's the 50. Let me throw a 34 on there real quick. I like using 34-day moving average is what I'm talking about. Yeah, right there. Perfect. I mean, that's kind of cookie cutter. That's textbook. Again, when you look at this, if you just think about it and go, we have been going straight up for 5 months or however long, 4 months, whatever, it just can't keep going, right? If you look at this chart, there is nothing scary about this chart. In fact, we're breaking out above that Darvas box right there. That looks great, right? So anyway, let's be careful out there. As we go, remember we have got. Let me get back up here and make sure I get my dates right. Oops. Hold on a second. We have got the next big event that we've got is, where's my calendar? All right. OPEX, options expiration monthly, is technically tomorrow at the close. And the next big thing is we've got PCE on the 29th. That's a big number for the Fed to watch. We've also got Nvidia's on the 27th. A lot of other earnings kind of scattered in here, smaller ones. The big ones have already reported. We get into September. We've got the next CPI, what gave us that big bump right there. That's on the 11th. I believe PPI is on the 10th. Fed meeting is in September on the 17th. Lots coming up here in the next 3 or 4 weeks. So, again, we just got to be careful, right? Keep an eye on that economic calendar, see what's coming up, and really watch things closely. Again, use, as always, but even more important now, use stops and diligent management in your trade, size accordingly, all that kind of stuff, because we can have a flush at any time, and for any reason. It could be tariffs, it could be Powell, it could be anything, but again, on the surface, everything honestly looks pretty good for more upside. So there's no reason to be thinking black swan stuff here, especially with rate cuts coming, etc. So anyway, that's what I've got, and if I can help you, let me know. I'm at Simpler Trading, of course. I'm in the main room all the time. I've got a main room. I've got a trade service called Bias. I'm in there every day. We're putting on trades, doing all that fun stuff. So let me know if I can help. And with that, let me wind it up, and I'll see you guys at the next update. Thanks. Take care.
Without Simpler Trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency. It's one of the things that won me